Hey, what's going on, guys? Corey Smith here, CoreFX. Welcome back to another pre-week market analysis video here through T3 Live. Um, do these videos every week, release them by Sunday for the week ahead, and pretty much just goes over the foreign currency markets. Um, I cover the prior week, the top performing and underperforming currencies, what's going on in the news, how each individual pair's index did as a whole, as far as the majors go, and then I go into and cover the week ahead, what we need to look for, what news events are trade worthy, or if you don't like trading news events, know to manage your positions or get out prior to, and really just what to expect overall fundamentally with some technical analysis as well for the week ahead. It is now Sunday, November 26th. We just got done a big holiday week here in the U.S. I've been away all week for visiting family for the holidays, so it's going to be a short video here for me. I'm going to actually go over and just really cover what happened with the currencies last week on the technical charts, and then I'm just going to cover what's going on this week and what to be prepared for. So shorter video here this week, guys. It's a holiday over here in the U.S. and just a lot going on. But starting with the overall performance, we had the dollar, yen, CAD as the bottom three. Really, the story was a weak dollar all week. Dollar sold off really sharply, and across the board, everything else was pretty much stronger against it. And the top three performers were the euro, New Zealand dollar, and the pound. Swiss franc was close behind, and Aussie as well. But the euro strength and the dollar weakness was really the major stories of the week here in the FX markets. But again, whenever you have a major holiday in Europe or the US, kind of takes a lot of players out of the Forex markets and slows things down a bit. And this week we saw that little bit of a sluggish movements this week, and I wasn't really very active as I was away visiting family, and I use weeks like this to kind of step away from the markets and kind of refresh my brain here. But moving on to the dollar, starting with the US dollar. Again, we were in a big downtrend all year. Saw this inverse head and shoulders form at a bottom. Price broke the neckline, and we thought we could see some potential rise of the dollar, but we have not seen that. The opposite has happened. Price did this week finally now break below this neckline and the 50 SMA and fall back down to this strong support of the left and right shoulders, the inverse head and shoulders. So I do expect a little bit of a bounce here after such a strong move, but now we're below the 50 SMA. We broke below these strong support levels. The 20 sloping down pretty strongly, and looks like it could cross the 50 soon if we continue to see this. So I have now shifted back to a downtrend for the US dollar, although I expect there to be a little bit of bounce this week. Overall, the dollar now has me looking to the downside. The euro was strong all week. Basically, like we go over every week, this is going to be the exact opposite story of the dollar index. We have this head and shoulders form after this strong uptrend, broke the neckline, made this little low base here below the SMAs, now in a downtrend. Thought we were going to roll over and continue lower, but it broke this trend line, broke the SMAs this week, and now we are up above the shoulder line of the left and right shoulders. So moving back to an uptrend, we're going to be able to start seeing a little bit of a trend line drawable in here for the now uptrend. So we'll have to wait and see here what we get. We might have a little bit of a basing pattern, a little bit of a sell-off before continuing higher, but again, my eyes have now shifted to an uptrend for the euro. Yen, strong all week, as you can see here. It blew through the 50 SMA, now broke through the 200 SMA, but pulled back a little bit here on a very strong weekly resistance level. Again, with this one, we were in a downtrend, violated it. We have to stay on our toes. We have to adapt, constantly let our analysis change with the markets, never anchor to one belief or bias. So we are playing on our toes, and the yen is now telling us to be more bullish. So we're at a strong zone here, and again, we could see some sideways movement or some retracement after this strong move. If we throw a Fibonacci here with this strong bullish move, maybe we could see price come back to this 382 level here, or maybe even all the way back down to the 50, 618 level. But all in all, I'm expecting a continuation of this move higher. The pound finally starting to see a break out of this range we've been in for a couple months. We're just testing the resistance now, and it's not fully confirmed that it broke out, but we're above the SMAs. 20 starting to slope upward. Hopefully we can get some more bullishness here, and this 20 can cross the 50, and we can get a little bit of a strong uptrend returning back to the pound here. Canadian dollar still moving sideways here in this newly formed downtrend. We are above the 20 SMA, but still below the 50, above the 200. But this was a newly formed downtrend here when we came up here and violated this trend line, set this new lower low, and have now been moving lower since. We are now in a bear pennant or symmetrical triangle, whatever you want to call it. This is a basing pattern. I'll be looking for a break to the downside of this to continue lower and at least come back down to this 76 level down here. All in all, though, bearish on the CAD. Big news out of the CAD this week, so definitely one of the pairs to watch. Swiss franc, another one where we were in a strong downtrend, finally had a low base down here, broke higher, retested this strong resistance, thought we could have moved lower down off of it, but has now broken up above it as well, and we're now opening up above this 50 SMA, close to the 200 as well, on a strong weekly resistance level here. So at a very critical point here, but again violating some of these market structures, setting a new higher high and potentially reversing this downtrend at a critical level here. So we're gonna have to wait to see how this develops a little further. Australian dollar, this is one of the nicer looking pairs to me this week, currencies at least. So we've been in this downtrend, lower low, lower high, lower low, lower high, continuing moving down. This week we did rally up to retest this broken support, now resistance on this trend line, and it's 20 SMA here, so this could be our lower high, and we could see another continuation move to the downside, maybe down to this 74.50 area, 75 area of this strong support. But all in all, a little bit more cleaner price action here out of the Aussie, and hopefully we see a little bit more development for a further move lower this week. New Zealand dollar, as we saw, we are still in this weekly very strong support zone here. We are still in a low basing pattern. If you switch it to the daily, however, we saw that we did come down and close below the level here, but price quickly shot back up. A little bit of an outside reversal. Thought we were going to break out, trapped a lot of sellers down here, pulled back up, stopped a lot of people out. But we are still in a downtrend. We are at a nice retracement level here. The 69 psychological resistance looks like it's about a 50% Fibonacci area as well. So some continuation to the downside out of New Zealand I'm expecting this week as well. But we'll have to wait and see how this develops and what we get out of the markets here. As I said, I'm going to skip over covering last week. It was a holiday week here in the U.S. Didn't have too much time this weekend. Apologize for that, guys. This won't happen very often. It's just one of those weeks here in the U.S. where holidays are starting to kick in, and it's really a good time to step away from the markets though a little bit and get some quality time to reset your mind, reset your focus, reprioritize what you're doing, and really just clear out all the clutter in your mind and get things back to normal. So I had a good long week here of disconnecting a little bit and refreshing the mind. So I'm just going to go ahead and move forward and cover what to look for this week, so we have a little bit of a quicker, easier video here. Starting with Sunday, Monday, again another slow start to the week. Not too much going on. Nothing really noteworthy for Sunday or Monday, either one. And then Tuesday starts some news out of the pound. We have the financial stability report out of the Bank of England and the bank stress test. These are big semi-annual reports. They're done twice a year. The stress test is done once a year, but these financial stability reports are basically just going to give the overall outlook of the economic situation in the UK, and the bank stress test is going to be again done once a year. It's a big report for the financial sectors and really critical for the UK to see how their banking's doing going into this Brexit. So any signs of weakness or stress tests not really giving us too good of results could frighten some investors and see some weakness in the pound with this Brexit deal looming. But have to wait and see. Some strong results here could see some further appreciation of the pound, as we're seeing that there's just a lot of good data coming out of the UK even with this Brexit looming. US dollar has consumer confidence shortly after. It's a monthly survey of households to gauge consumer sentiment towards economic conditions. Again, just a forward-looking report to see how consumers feel about the economy and get an idea of what their actions will be like. Getting into the minds of consumers is what really the economy is all about. If we know who's going to be, if the general consensus and sentiment is that the economy is not looking too good, people are typically going to hold on to their money, spend less of their money, less likely to buy a new car, buy a new house, start a new business, expand their existing business, So this really gives us a good look into the future. If consumer surveys come back showing that the consumers, are really confident about the future and really positive looking forward, then this is a good chance that the people are going to be more likely to buy that new car, to get that new personal loan, to get that new mortgage, to get that new home, to start that new business they've been wanting to start. So really good gauge of the economy and a forward-looking mechanism here we use in the U.S. a lot. Um, After that, we have Bank of Canada Governor Pelosi speaking at a press conference regarding the financial system review. Nothing too crazy, but again, definitely worth watching. If you're looking at a CAD trade or in a CAD trade, definitely be aware of this 11:15 a.m. Eastern Time on Tuesday. Then we have another financial stability report, this one out of New Zealand. Again, this is biannual, it's twice a year. Very important as it shows the central bank's view of inflation and the overall economy. And then we have the Reserve Bank fill-in Governor Spencer to speak before the Parliament after the report and testify what the reasoning behind it and how they feel about it. So these are some really big reports here out of New Zealand and out of the pound, Great Britain. So really keep an eye on these and be very careful if you're holding trades. If you're looking for some trades, that's a good opportunity to do so. Then we have some CPI numbers out of Spain and Germany, two of the biggest economies in Europe. So this will have some impact on the euro as inflation. CPI is one of the biggest readings of inflation, the consumer price index. So their inflation is something that's been struggling around the world, and these are numbers that are very highly watched. OPEC meetings. Why this is important in Forex. So they're meeting all day, and it's 2 times a year, and OPEC is the major oil conglomerates that have formed their own committee, and they really set the stage for oil prices. And as far as the Forex markets go, the most important thing this is going to be for us is going to be with the Canadian dollar. It's a very highly oil-dependent economy. They're a big oil sector. A lot of their economy comes from commodities, and oil is the big one there. So the CAD can see some very strong moves around these OPEC meetings, so make sure you are well aware of what's going on. And if you're looking to make some trades here, that could be volatile, but definitely if you're in trades, either manage your risk really closely or just get out of positions prior to it. Following that, we have the preliminary GDP quarterly report out of the U.S. This is a pretty big deal as it's the first report of the quarterly GDP. So it's done, I believe, 60 days after the quarter ends, and this is going to be our first reading of what the GDP is looking like for the quarter. So it's definitely going to be a big report to watch and has some impact on the dollar for sure. Following that, we have Yellen testifying. Not too crazy, she's speaking before the Congress, but it's definitely still something we want to be aware of, and as with any central banker speaking, it's something to keep on your calendar, stay aware of, and make sure you're paying attention to while it's going on. Then we have the New Zealand dollar's ANZ business confidence, and this is going to be the survey of households for consumer sentiment, just like with the U.S. on the economy. Theirs is going to be for 12 months forward, so they're going to give their sentiment on what the economy is looking like 12 months out, and it pretty much is just a forward-looking indicator to give us an idea of how the consumers are feeling in New Zealand. Then we have the private capital expenditure quarterly report out of Australia. This is going to show new investments made by private companies. It's really just a leading indicator to gauge the health of the Australian economy, as it's showing what businesses are more optimistic in taking out more expenditures, expanding more into hiring new employees, opening new facilities, buying new machinery, these kind of things. It's a good idea to show us what the business owners and the business of Australia is looking forward to. And again, like with the consumer confidence, less capital expenditure is going to show more pessimistic sentiment, more of a bearish outlook moving forward on the economy. So really, the supply and demand of the currencies is all tied into this, and the more confidence we see with the more capital expenditures we're seeing from these private companies, the more bullish the Australian dollar could be with more demand for the currency. Following that, we do have a Chinese manufacturing PMI number. This is not going to be as reliable as the number we get the next night, but still could have some movements. These are those events that I tell you about that are decent opportunities to trade the Australian dollar when you have an Australian report followed by a Chinese report, as the economies are really closely linked. And this could be a nice little initial move here off of a news event, and then a follow-through move here off of the subsiding news event out of China. So good trading opportunities here if you like to look for some Australian dollar news events paired up with the Chinese. And then that takes us to Thursday, where we have not too much going on except for the CPI numbers out of Europe. These are going to be the flash estimates. They're done monthly, and again, the majority of inflation is calculated in the consumer price index, and it's really important currently as inflation remains low around the world, and especially in Europe. You can see typical inflation targets around 2%, and they're struggling to even estimate to be hitting 1.6%. So really need to see a pickup of these numbers here. As you can see, we've been struggling to even hit these low targets, so big numbers to be watching right now. Outside of that, all we really had is the Chinese, the Caixin manufacturing PMI. This is the more reliable report out of China for the manufacturing sector with the Purchasing Managers Index, but really not too impactful either of these. Just could offer a few trading opportunities in the Australian dollar. Taking us to Friday, this is going to be the day of the week. Friday is going to be the big trading day. Starting out of the pound manufacturing PMI, this beat pretty good last reading, and this is showing the manufacturing index out of the UK. So with Brexit, again, all this data is extremely important right now. The Bank of England and really all central banks are really data dependent right now, especially the Bank of England with Brexit happening. They just hiked rates for the first time in a decade. All these data reports coming out are going to have moves on the pound for now. So expect to see some bullishness if we beat this report, and potentially some bearishness if we miss it. But following that, the major event of the week is going to be the CAD's unemployment rate. This is going to be like the NFP out of Canada. Shows their employment change, which last month was a great number. Expected 15,000 new jobs created. They created 35,000. Great number. But their unemployment rate did tick slightly higher, 6.3%. So they're sitting a little bit higher than the U.S. and some of the other parts of the world here. But they also released their GDP report at the same time, which has missed now 2 readings in a row after following the Bank of Canada dual hiking of interest rates. So another miss here. We're having some pretty terrible readings here. Another miss out of Canada could see some continued downtrend out of this Canadian dollar, as I've showed you guys here. We could see maybe a little bit move lower at the beginning of the week, and then that report potentially could see us break out of this pennant here, maybe come down, rally a little bit, and then move lower. But all in all, these are the kind of events that we want to look for the strong trending moves. And these employment numbers and GDP both coming out at once is a very impactful number. You could see 60 plus pips move out of the CAD from this. And again, the OPEC meetings could cause some moves earlier in the week. So if we get the CAD moving to the downside earlier in the week off the OPEC, then I'll be going into these reports with a slightly bearish bias, just because the technicals in the direction of the trend always have a slight edge as opposed to going into a news event blind. So we'll be looking for that. And then we just have the manufacturing PMI numbers out of the US dollar. Again, this is the Purchasing Managers Index. This is going to show us the manufacturing sector and how it's looking, the health of it. So another thing to be watching here for the US dollar. But that pretty much covers it for us here, guys. Again, sorry if this is a short week, but it's a holiday here in the US. It was just a crazy week. I just got home today. Barely had any sleep last night for my flight. So just wanted to get something out here. I got to keep these videos going for you guys, but the holiday week's never really too much to cover. So I will definitely see you guys back next week. We'll have the full-on in-depth analysis as always. I hope this helped you guys get ready for the week ahead here. Make sure to subscribe and check out all T3 Live's videos here. They got some great content for not just Forex, but all across the board with equities. Some really, really big names, some of the biggest in the industry. Some great stuff. Don't forget to check me out, Corey Smith, CoreFX, on Instagram, YouTube, and Facebook. So thank you guys very much. Make sure you stay tuned to these videos and keep up with them every week to catch everything you need to know for the markets moving forward at the beginning of the week so you are prepared. Thank you guys. I appreciate it. I'll see you next time.